Good morning, traders and investors. Are you guys ready to wrap up the week right here on pre-market prep? Let's dive into today's topics. Of course, we got crude oil rebounding a little bit. Non-farm payrolls that we'll keep on watch, of course, going to be released at 8:30. We got Lululemon. We got Broadcom earnings, Meta and a Qualcomm deal. We'll talk about that. Pinduoduo trying to compete with Amazon. Twitter's edit button. Did anyone use it yesterday? Let me know in the chat. Of course, we got our special guest today, Jeffrey Hirsch, Chief Market Strategist at Probabilities Fund Management and Editor-in-Chief of the Stock Trader Almanac. If you haven't checked that out, definitely go ahead and do so. Let's get into today's show. Who's ready to get the day started with pre-market prep? Hit the like button. Let us know what stock is on your watch list today in the chat. And rise and shine. It's time to start the day. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day. Good morning, traders. Let's go ahead. Let's bring on Joel Elconin, Dennis Dick, and let's talk about the markets. Let's take a look.
All right. After that sneaky rally yesterday, we're just hanging out unchanged here, basically up a tick. So we'll see what happens on the jobs number. I guess we're not expecting any major surprise. I guess we want a bad number, folks. That's what we want. We want a bad number. Crude up a buck 60 at 88.20. Gold's going the same way. That's up $7, trying to defend 1700, 1716.40. Silver trying to get back into the 18 handle, up 12.9 cents at 1779. Bitcoin, I've never seen it be so quiet, up 265 at 19,960. And Ethereum futures are up $30.50 at 1580.50. Nice rally yesterday, Dennis. I mean, the question is, we broke a 4-day losing streak, right? We know how streaky the market is. We did that in June, and then we had another couple rough days before we bottomed. Is it time to take off the bearish cap and put on the bullish cap?
Time to get neutral. If you're a full-on rah, bear, I would say more neutral here. I think we bounced where we needed to bounce, Joel. I mean, we talk about 50% retracement so much on this show, and I think it's valid to think that we bounced kind of where we should. 390, 389 was the low. That little tick back on July.
I want to jump in there a little bit though, because it wasn't the 50% there; it was the 61.8.
Yeah, we got through it. We got through the 50.
Just wanted to kind of jump in there.
Yep.
But it's still retracements are working well here.
Yeah, I'm ballparking it, so I'm looking from 360 to 430. So I kind of see, I don't know, like your 50% might be different than mine, but I see a 70-point move, and then I see a 35, 36 points off. So yeah, 395, 394. So we're through. I don't know if I see a 61, but I definitely can see that 390 to 395. So 395 was probably the 50% of the move. So about 5 points below that on the SPY. So ballparking it, but I mean, it's overall. It's not like it's like perfect science.
Exactly.
Oh yeah, we're right there.
I actually really like in between there. Because sometimes you'll get a little crack of the 50, right, and then a recovery.
Yeah, that's what we did on the upside too, just enough to fake people out. But yeah, maybe
we'll come down enough.
Yeah,
that I think if you full on were short this market, I'd be bringing them in at this point, because we don't know how the next number is going to be. CPI starts coming down, you get that rip roaring rally here. So, obviously we got jobs number here today to give us a little indication. I don't think it's going to be crazy out the jobs number, but I do think that, these numbers, is what matters going forward. So that CPI number that's obviously going to come up here, it's next week? I'm going to lose track of
the
weeks.
13th.
Oh, 13th. Week and a half here yet. So we got a little bit of time before that, but I mean, overall, I'm still buying dips, selling rips, shorting rips, buying dips. The shorting of the rips has worked much better than the buying of the dips. But again, I'm going to say 2022, the contrarian market. If you're chasing moves, you're doing it wrong in 2022.
Had some good earnings though, right? We can be upbeat. We got some good earnings. Dennis, you out there buying some yoga pants?
I should have been, obviously. Lululemon. I think Portnoy was saying he was buying it beforehand, before the print. So congratulations
How
if
is
that was
Dave?
true.
I haven't heard.
I just saw a tweet go by, and he just tweeted that he was buying, or he was getting into Lulu ahead of the print. I don't know if that's, if he's just saying that or whatever, if he's even trading stocks. He's right back rah sports. I don't think he's trading too much at all anymore. But I mean, he's right on this one. It was a nice pop here. Let's go into the Lululemon, because this thing seems to be recession proof.
All right, Lululemon here, Q2 EPS at $2.20, beating the $1.86 estimate. Sales at $1.9 billion, beating the $1.76 billion estimate. They see Q3 EPS at $1.90 to $1.95 versus the $1.78 estimate. So raising their Q3 EPS. Also, a slight raise here of the sales on the high end towards $1.80 billion versus a $1.73 billion estimate. They do see full year 2022 adjusted EPS also higher, a low end of $9.75, high end $9.90 versus the $9.44 estimate. So also they saw a good comparable sales increase to 23%.
Nice lift. Again, I don't chase in this environment, but holy mackerel, that's a nice print. And it's been just it gapped up and kind of just held completely, Joel. It's just kind of like they tightened it right up. So it's not like all of a sudden, we're still in volatile land here. We've had 8 hours of trading basically off this print, 4 last night and 4 this morning. And it's just kind of holding up here. So kind of acts like where it wants to be. Everything to like in those numbers. I mean, here's another stock. We talked about ULTA before, firing on all cylinders. Lululemon firing on all cylinders as well. The management of this company is just awesome. Again, it's valuation that keeps me out of it, but you can't argue with the performance. The stock, from a fundamental basis, just keeps performing.
That was the first thing that I looked at this, and I'm like, hey, someone's bidding it up here, right?
Yeah.
They're not, I don't know if they're bidding it to whack it, but as far as targets go on the upside, I just would keep an eye just a little bit above where it is right now. I'll just give you the pre-market high at 23.84, and there's a couple pesky highs here, right here on the day. Yeah, pesky highs. So, I'm hesitant to say that it's not, it's not going to go through there and take that out, because, you were looking. Did you see Okta yesterday?
Oh my gosh. When they want to kill something, they kill it. I'll say that much. Yeah. They want to kill it, they kill it.
Or if they want to buy it, they buy it. So, keep an eye, if you pop above 325, you go 326, 327, always be on high alert if it comes back down through that area.
All right. Well, I did want to show here. I caught from the chat, and I will give you a shout out there. Zen Bullish said, Lulu always seems to be good to us. Yes. And how can you take a look at that? Maybe you're just taking a look at prior earnings, right? And here's the pro to kind of bring that up. Look at all the green there, right? It's very few red marks. Which one are you looking at? Lululemon.
Lulu. No.
Well,
which green
EPS or revenue? Okay. So we could be looking at surprise EPS. So this
my eyes don't work, so I cannot see that. So green. So explain a little bit more.
All right.
Can you make it bigger, maybe?
Yeah.
I literally just see it green. Okay.
I'll zoom in here. And so
there you go. Now I can see it.
All right. So we're looking at surprise EPS and surprise revenue and the comparison. And you can see that there's only about 2 or 3 reds in about like 30 quarters here. So that shows us that what you stated there, Zen, that usually they do well for us. Yep. At least from historical, they have been beating on EPS and revenue, which is what you want to be seeing for a strong company with good financials there.
Who's one of those companies that always disappoints, just to compare? Who's one of those companies? Joel, who's one of those companies that we're always like?
X.
U.S. Steel?
Yeah.
That's cyclical, so that could be wild. Let's see what U.S. Steel looks like. It's a fun exercise. They got lots of the same thing.
Maybe. I don't know.
Some wild ones.
Yeah.
It's so cyclical. Look at the cyclicality of that business, though.
Yeah.
Like you just see like, boom, the earnings are terrible. We're losing money. Oh, boom, we're killing it. Like you just see how cyclical it is. Like you get stuck in this value trap, but when the recession hits, that thing starts losing money like crazy too. So, the consistency of this more to be desired.
Let's check like a Zoom, like a growth stock or something. Still pretty good. I mean, to tell you the truth, Earnings haven't been that bad, really. I mean, at least from
It's
what I've been
just the
seeing.
future.
There's always companies typically beat. I mean, they guide
Yeah.
to a number that they can beat. So it's not like half or beat and half or miss. And it's always just, it's managing, expectations. And companies put it out there. They put out a number that they feel like they can beat. So just to manage those expectations. People talking about the hair indicator. It is crazy today. I've got this. So anyways, I'm in the new house. We put in a water softener. I've never had a water softener before, and you guys might be able to help me with this, but it's like hard to get the shampoo out and the soap out. It's like we have really hard water where I'm at, just off in Georgian Bay.
I want to
But I'm
join the
like, I
party.
cannot even get. My hair was crazy when I had hard water. Now I got soft water. I don't even know what to do with it. So I think we
feel
got to do
like-
an adjustment on this water softener. And I called the water company because it's like crazy soft that I can't even get the soap off.
I'm
So-
joining in with you, Dennis. Let's
Dennis,
go. We're getting wild with it today.
Dennis, a comb or a brush. You ever
We
heard of
don't
that?
believe we don't
don't
have
even
those
own
things,
a
Joel. Joel, we don't
It's
have those
crazy.
things. We use fingers.
Yeah,
Gotta do
look,
the old
I
finger
like this
trick.
one.
The old finger trick. Bring it right back to
Okay,
life. There
it's all
we go.
better.
I'm glad that you guys can participate in a tangent, and I can quietly observe here. But
In
Hey,
any
that's
we're
what
not
it's
paid
all
for
about.
our looks. In
You
fact, we're
guys
not
don't
paid
like
at all.
my hair?
I love it. I love it. That's what it's all about. That's the hair
Yeah.
indicator. All right, let's keep going
It's like
here
the
towards
briefcase
the,
indicates the hair indicator. I mean, it's gonna be a wild day.
yeah.
Come
yeah.
on, folks.
That does. That makes me excited about today. Let's talk about the next major earnings stock that caught a lot of attention, which was Broadcom. I feel like this was a good report on a good day. Sometimes it matters about what day you report.
You're
I
exactly
feel like
right.
it was a good reporting day for Broadcom. EPS at $9.73 beat the $9.56 estimate. Sales at 8.46 beating the 8.37 billion estimate. They see Q4 sales at 8.9 billion versus 8.73 billion estimate. And Broadcom CEO Hock Tan says he expects network segment to be up 30% year over year. And Q4 expects server storage connectivity revenue to grow 45% year over year. And also their broadband business to grow above 20% year over year. So some good numbers mentioned by the CEO on the earnings call.
Okay, I don't know if I want to buy anything to do with chips right now, though. This is the problem as well.
That is the problem, right?
So you're up 15, you're getting a nice pop. Everybody's bag holding that bought this thing in the last 3 weeks. So unlike Lululemon, that, you're still talking about a stock that, I guess the charts look similar, but I don't know. I just think after the whole NVIDIA debacle, which we can get into again here, not that AVGO is NVIDIA, but chips. I'm just staying away from chips right now. I'm staying away from computer chips. I'm staying away from all types of chips, potato chips, trying to get healthier. I'm just off chips right now. That's what it is. I'll let you know I get back on chips.
No dip in chips? Come on.
I love dipping chips, but I'm pushing 220 here.
Ooh,
it's starting to get out of hand.
Really?
Oh yeah, the 225 balls
man.
are out
I'll take
there.
20 from
Wait,
you,
what
Dennis.
happened? What happened to that 215 resistance?
No, I know we took that out, Joel. Now we're pushing up to 220 here.
That's the
so
new house
my
stress.
It's getting a little bit intense. So staying off the chips, all chips, including AVGO.
Gonna have to get back on the ice, Dennis. Get back on the ice.
On the
All
ice.
right. Let's go.
Yeah, I know.
Let's
We
go.
got to
Let's
do
go a
that.
number.
We do. It's starting. Hockey
Let's
season.
go.
Kids starts playing next week.
All right.
A lot of people trying to get their money back in this one, is Triple D said. And let's just focus on our 2-day high, 5, 10, 16. If somehow the Bulls can get it through there, you got some room up closer to 518. Don't know where to buy it. Minor support here in pre-market at 504. So let's go 504, 510. Let's see what happens early on.
Let's talk NVIDIA here because it made a new 52-week low yesterday, taking out the low of the move. It's very impressive that this stock has come down as quickly as it has. I mean, you were talking about, this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days ago, this thing's up near $200, and you're like, man, could you take out the 200? Not that we were talking about it because we were been selling reps, but other bulls, and obviously on CNBC, we're talking about potentially taking it out. And Kramer is a little bit rah bullish and saying, "Oh, he thought the low was in for stocks," and just like that, they pulled the rug out from under this thing. It has the earnings report. It bounces back a little bit the day after the earnings report, and then just cannot stop going down. It cannot stop going down. I don't know. You have so many bag holders in this thing now. Even Kramer turned on it yesterday. We know, like I was saying, you can rate the Kramer algorithm. The stock's up, he's bullish. Stock is down, he's bearish. It's a pure momentum trader, which is not working in 2022. But, it might start working again. So, he might start being right again more often. $132 the low yesterday. We did bounce off that. That's the good news. We got significantly off the low. Bad news is we're through support, and there is not that much below.
Yeah, it trading up a little bit. If you're looking for more upside in this today, whoever didn't have a position, wasn't getting smoked, was averaging down and buying, they're saying, "Hey, I want out at 140," and this has been a pesky seller there. So above 140, definitely opens up on the upside here, because you can look at yesterday's range, maybe look up to the top of the gap, and then on the downside here, you definitely had the new buyers. Those New Yorkers came back from that 3 martini lunch, and they're like, "Man, we got to start scooping this up under 135." So when I see that kind of formation, I say, okay, even if they whack it today, I think you find some buyers here.
And the AMD, obviously, we know I sold that, most of it.
Oh,
I sold
nice
3/4
job
position
on
up
that.
around 100. Should have sold it all. Kept a small piece. Should have sold it all. But I wanted to have a small piece. I don't know. Man, 71, you start thinking you're at 82. We're going to retest those July lows. I'm asking you guys.
Not today.
Not today. I'll go with that. I'll go with the not today. I'll go with the not today.
Yeah, not today. I would think so.
I'd write the puts there, 71 puts for today if you want to take them.
I wonder if they even have
today's expiration. I'm gonna get about a penny for those. I'd buy that for a penny. I'd sell that for a penny.
Now, of course, one thing that I'm worried about is, will China kind of give some comments back because of this, right? I think this was very, very kind of a push by the U.S. government to completely tell a company not to sell to China and Russia. I think they're going to have to eventually answer back. What will that answer bring? Will it start a war in the chip battle? I think that's what I'm concerned about, because it's just going to start a battle if China starts, battling back and saying, well, if you guys are going to do this, then we're going to do this. And it just comes that back and forth action.
I don't agree with this. Paul, I don't agree with this at all. We're full on political war here with China. I think we need to not be so aggressive, and initiating stuff too. Again, just got to sit back and look at the situation here. Start with the Pelosi visit, took some off. Now you're doing other things. You get all your goods from them, like a majority of them. We're addicted to cheap China goods. And if we're going to keep harming our political relationships, we better be prepared to not be getting cheap products. So you want to tackle inflation. This is not the way to do it. China can totally screw up our supply chain, or worse, start cutting us off of stuff too, which is a scary thought. So I'm not, I've been saying the whole time, this is my biggest concern, is that China invades Taiwan, and now we have a whole huge can of worms, much bigger than even the Russian situation, at least from a North American perspective, because we get all our goods from them. It's one thing to have less oil from Russia. It's quite another to all of a sudden say, oh, we're going to do sanctions, and we're going to start, what would we do? Let's just say a situation. China does indeed invade Taiwan. What do? What does North America do? We just let it happen?
I
think
we'll do the same thing.
Sanctions and stuff like they did to Russia.
Sanctions,
what do they do?
And weapons to Taiwan. That's what I would expect.
So I would expect the same thing, and it's not going to be good enough for anything. And then you start doing sanctions, you start doing stuff like that. Well, they start fighting back and saying, okay, well, here, Apple, here, everybody. How many companies, make their cheap products, or buying cheap products from China? Almost
just
all
to
of
kind
them.
of add to this is that China already was upset with just the CHIPS Act. They were already lashing out on that deal. They said that it violated fair market principles. and targeted Beijing's own efforts to build a semiconductor industry. So I don't think they're going to be too happy that they're telling a company like NVIDIA that you cannot sell over there and you need licensing and special kind of work to try to get them to slow down the kind of the money to China now. And I think they're going to have to fight back. It's almost like inevitable for China to go fight back.
The heat's coming.
That's why
we don't know what it's going to be, but it's going to come. The heat is coming. And they have a lot of power over us. And, obviously in the form of we get the majority of our stuff from China. So until we start getting, actual production of goods in North America, bringing it all back, which they're going to need to do. And you're not going to like the prices right now. You see the prices of stuff. You think it's high now. Imagine, we have to start producing all of our stuff in North America again. You're not going to like those prices of everything at all. You're going to see inflation, crazy rampant inflation, especially the script of supply chain. So there's a lot of things, a lot of, wild cards. It's like I've said before, I've used the word deglobalization. That's what we're seeing here to a certain extent. I personally, if I would be trying to repair relationships with China, not.
Do you think they want to repair relationships?
U.S. Well,
I mean, I think this is first of all, this is something that's been going on for a long time, right?
Not really. Go back 5 years ago, 4 years ago, we didn't have a bad relationship with China. We didn't have a bad relationship. Like Russia wasn't.
So when did it start, Dennis?
Last two years, really. I mean, the last couple of years.
What?
I don't think.
Did I forget about trade wars? Trade wars and sanctions and tariffs? Did I forget about that?
I don't think it's been extreme though, Joel. I don't think like we
kicked their butt. We kicked their butt. All right, let's move off the.
Joel's ready to move everything to North America and cut China off. So
no,
I'm just saying.
I'm just saying I'm majored in political science, but I'm not a political scientist. So
you're right though, Joel. I mean, this is what is going to happen. Like this is the way it's going. Is we're going to have to produce stuff in North America again. And we're not going to work for $2 an hour. Nobody is here. You're lucky to find them people producing goods for $30 an hour, really, $25, $30 an hour. The price of everything, if that happens, is going to go bananas. We're going to see huge price increases here. So I'm thinking you should try to be repairing these relationships, but they're not. So in any regard here, it's good for our jobs. We'll bring them back here. Might as well start bringing the jobs back because it doesn't look like we're repairing these relationships anytime soon. But just inflation is here to stay. Mitch, you're with me on this, aren't you? Inflation is here to stay if we're going to keep harming our relationships with China.
Yeah, I mean, this isn't going to help inflation by any means if there's more political battles with China. No, and it's just something to keep on watch.
We've successfully divided our chat. So can we?
Of course, but this is the next big thing.
Yeah, this is what you got to watch out for. This is the reason why we bring this up because
this is the elephant in the room here. It's inflation. It's been the problem the whole time. We keep talking about peak inflation. If we're going to keep harming the relationship with China, you have not even seen close to peak inflation here yet. That's what So I'm moving with Mitch on that maybe we haven't seen peak inflation. And if the China relationship continues to break down, we're going to see huge inflation over here. So just be prepared for that.
All right, let's keep going to the deal that we caught today, Meta and Qualcomm deal. Not a bad deal there. This deal is to develop custom chipset for virtual reality products. They signed a multi-year agreement to collaborate on a new era of spatial computing using Qualcomm's extended reality Snapdragon technology. We're working with Qualcomm Technologies on customized virtual reality chipset powered by Snapdragon XR's platform and technology for our future roadmap.
Watch your offers there, Dennis. Sorry,
yeah,
Mitch.
We're going up there,
Yep.
We're getting choppy ahead of the jobs.
Yeah, unless someone knows the jobs number, shouldn't be moving this
jumping
quick.
The gun again.
Now they're jumping it 6 minutes early.
That's a little bit early in my book.
It, man.
I didn't get the memo.
There's always that head fake.
Yeah, I'm not falling for those algos, man.
Did you jump the gun back when you were in preschool or in school there, elementary school, Joel, when you were in the races? I feel like he'd always be the edge and he'd be looking to try to time that gun to just get that extra edge on that kid next to him. I feel like Joel, you'd be that.
I used to have the most wicked start in swimming. and they actually changed the rules because of me.
They
did.
Why?
They did, because it used to be allowed 2 false starts, right? Before you
so
were
you were
eliminated
going
from
for
the
the
race.
false
got the
start.
false starts. 'cause
So
he's trying
I
to
would
time
always
it.
like you like every starter had, swimmers take your mark, and then you can get the
Trying to
rhythm.
time that count.
So
Trying to
like
time
I'd be
that
like,
count.
they go, it'd be like 1001, and so I'd go down, and then boom, and then they bang, 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 and they'd bring you back. So then you couldn't jump. But the best thing is when someone else false started, then they weren't looking at you. So you could jump the gun, and they'd be like, "Oh, wait, no, wait, was that lane 3, lane 4? Oh, I'll just let it go." And I'd be out there like, "Okay, yeah, nice start." But you're right, good call on that one.
I knew it.
But now
All right.
one false start, you're out. You're out. You can't
You're out
jump
on
it off.
false start now.
One false start, yeah.
Holy, that's tough.
But I got around that. You just hold the block really tight. Like if they say swimmer, they go swimmers
He finds a
stand
way
up.
around that too. You gotta
Swimmers
work
stand up,
around.
and then like you're holding yourself back, and then you stand up, and then you get it over with. But another poor tangent here.
I got you
Let's
guys.
go.
This was the spike that we
was a good
saw right now. So I just wanted to kind of show you guys that.
Okay.
Yeah, that was the spike that we saw in the markets here. Let's get back to the Meta and Qualcomm deal. How do you feel about Meta? It's been going up recently.
It's been holding in there, hasn't it? Good call,
Yeah.
Mitch. Yeah, this is for some reason snap cutting jobs has been good for Meta, and this has just been hanging out near the low of the move. You have a good area to keep an eye on if you're looking more out of the metaverse here. Pair of highs, 67.36 and 67.84. Wouldn't want to be short going through that.
I sold my Meta just because it's been hanging out here too long. I didn't actually like all the Snapchat
That's what
stuff.
I call a
think
ticking
TikTok's
time
eating
bomb.
the lunch, and I think we're too far out. I think it's still a value trap here. I bought it off this support, but it's just come down here too many times. So I took I think 3 or 4 points I made on it, and I'm out for now.
Good.
I do like the support. So, I am selling something at support, which isn't something you should be doing. You should wait for it to break support. But I'm just concerned that, this snap, like obviously TikTok's eating the lunch, but I didn't actually like the rally off this, like the Snapchat. I think it was just, I think it's, oh yeah, you're cutting costs. Oh, that's a good thing. You're cutting costs. They're cutting costs because the revenues are dropping so substantially, Snapchat. And I'm scared Meta's going to have the same problems.
Yeah, I would just point to the hourly. I can see that trend line coming in. I would love to see a close above 166.85 for the bulls. That's what I would be watching on the upside.
All right, we got 2 minutes here.
Let's go. Let's get the estimates here. And
do a preview.
Dennis,
I'm going to leave you because I'm going to trade this. If it's a nothing burger, I'll be back. If it's a something burger, you'll see me probably after Jeffrey Hirsch.
Okay. Like I said, we covered Meta. Qualcomm is just not. Now they're not too excited about this for Qualcomm. Real bad day yesterday. Coming back above yesterday's high. I mean, maybe you got some room to do a gap fill here at 130, and then after that it opens up. So nice rebound off the low. So once again, I think if market does go into retreat mode, we closed $23, almost $4 off the low. So don't think we'll see that 126.08 today in Qualcomm.
All right, so let's go ahead. Let's talk about the numbers that are going to be coming out here. So we got 8:30 number non-farm payroll estimate is 300,000. Prior was 528,000, and then we'll also get, of course, the unemployment rate. It's not expected to change. The estimate is 3.5. Prior was 3.5. So that's not expected to change there. So, of course, what are we looking for? Well, we're trying to pay attention to see if fewer people applied for jobless benefits in the prior week than initially estimated. Weekless jobless claims fell 5,000 to 232,000. That was released yesterday. So that just shows us that more and more less jobless claims are coming to the market. That shows more room for the Fed to continue their hike schedule. So that's what we're trying to pay attention to. Like Joel mentioned, I think a weak number would kind of actually be better for the markets, but let's see what happens here.
Yeah, we're starting to get a little choppy here. We got Betsy Stevenson from University of Michigan on CNBC. That's an upgrade there. Go blue. We spiked up to 75.25. And now we're just chopping around. So, like as I said, I'm not falling for those algos there that jump the gun. Not much as far as resistance goes. If you're short going into this number, boy oh boy, you take out that pre-market high. I'm just not seeing anything up there until you get into the 400 or 400 for Spider 4,000. Whoa, must be a
There's the
weak
4.
number. Weak
There's the
number.
4. I was just about to
Triples.
say we look like we're trying to get towards that 4. So
Look at that pop and drop. Holy mackerel. Right back where we started from, it looks like. They popped it up to 94.75. Holy mackerel. And then just took it back down. So, August jobs report. What do you got for me, Mitch?
trying to pull the number here. It's
Okay.
coming in fast here. This is the thing that I need to kind of work on. A faster release. What do you guys use for your release? I've been trying to get it here.
Someone's
fast.
already had it. August. I guess you got to actually listen to Ranger Rick here. But I mean, the knee jerk reaction was up, and that was the way the algo jumpers went at just a few minutes. We are now at the highs. I'm saying it's August payrolls up
There we go,
315K.
315,000. My
Yep.
computer is lagging on that end. Here you go,
Okay.
guys. I got you guys. 315,000 versus 300,000. And what does this show? I mean, same thing that I kind of was talking about. Just shows more room for the Fed to kind of keep hiking. I don't think this really changes anything. Maybe a number like maybe 200,000 would have been a little bit better, but it just seems like the market, I feel like, has just been pushed down far enough where it wants to kind of had this
Unemployment rate, they're saying, is ticked up from 3.5 to 3.7. So
All right, a little
that's
tick.
good. That's
Little
good. It's
tick.
bad news, but it's good news.
Bad
Just
news, good news.
Yep, that's where this market is. We just got near that magic 400 or 4,000 in the S&Ps. 3999.50 stands as your pre-market high. We mentioned limited resistance on the upside. We'll see if the bulls can keep the full press court on here, a full court press. Let's take a look. Let's get rid of the 1 minute chart and let's see how some of the stocks are reacting. And as always, you like to take a look at the financials, right, and see how they're doing. Bank of America. Getting a little bit of a pop, came down and broke. Not as moving as much as the S&Ps. You did get a pop though, 20-second pop in Bank America. Let's go to 15-minute chart to illustrate what's going on here. 33.70 for you Bank America traders. Man, three pesky highs. Let's just call it 34.20 if you're looking for a target on the upside. Let's look at JP Morgan. JP Morgan, that's probably getting a little bit of a pop, not much. Let's see, that TLT got absolutely abused yesterday. Let's see how that's reacting today. Just up just a little bit. Nothing major in the TLT, trying to make its way back. Big tech. Let's see how they're reacting to it. Apple continuing on the gains from yesterday. Let's see how growth is doing. ARC, nice move off that 40 yesterday, Mitch. You pointed that out yesterday. Two other lows at 40. And we got a nice pop off that. So any other stocks that you're looking at here, Mitch? I mean,
well, a little
like
frustrated about my Tesla call yesterday. I was looking for this exact move, 270 to 280s, and it's right back in the daily levels. So I'll be watching Tesla. It's right back towards the daily support.
Do you
we'll
think
see what
that
happens.
you think Powell, he had this number last Friday and he figured, okay, I can talk tough now because, I just it's just so hard because it just seems like he just
I
goes
don't
to
think.
such polar
I mean,
extremes and he's wrong.
I just think that there's a point that the Fed is kind of telling you here that the equity price right now at this time is not their most important priority. Their priority is inflation, because if they don't tame it, this is just going to get worse in the long run. Because let's say if we do go into political issues with China, right? They're trying to fix inflation now, not later. And so that's why I think he came out with such a hawkish tune is that they really want to see this heading towards 2%. Are they going to wait until 2%? I don't think that will be the case either, but they're just animate on fighting inflation. So I think until we get about 3 CPI data reports or 3 PCE reports that point towards coming down, that's when you'll start seeing the Fed kind of lighten up. So it just needs to kind of give us multiple rolling averages.
Yeah, well, we can look at the charts and we can talk fundamentals, but a lot of times statistics speak louder than anything. And there's not a better person to bring in than Jeffrey Hirsch. He's the chief market strategist at Probabilities Fund Management and editor-in-chief of the good old stock traders Almanac. Let's bring on Mr. Hirsch today. And Jeffrey, how you doing?
I'm good. Nice and sunny here. A little cooler in New York. Finally.
New York. Okay, so stat me. Okay, we're looking for some stats.
I ran some numbers for you, man.
Give me some Labor Day stats. The day before Labor Day.
My illustrious partner Chris Mistel posted this morning on our blog. If you want to pull that up, or you want me to share my screen, we do. A few days ago, we put out the days before Labor Day, which are mixed, and we're seeing that here. And if you go to let's see. You want me to share it for you?
You know how to? Yeah. Can you? Yeah, I can stop mine.
Let's see if I can execute the share on the screen here.
Yep, it's at the bottom.
Yeah. Okay. Share screen.
Make sure you share the right screen there, Jeffrey.
No worries. I'll catch you.
There
you ready, Jess?
All
right. Let's get it on there. Boom. Got it.
We've seen weakness here in September, and it also runs along with the chart we posted on in our September Almanac. Am I switching screens here? You can see, there we go. So you got this typical September period. You got the first day of September that was yesterday, a little up, right? And then we get some sideways and a little strength mid-month, and then the end of the month period, and this runs into your favorite period of time, the quad witch. And we can debate the word quad witch, because why do you call it a quad witch? Single stock futures.
Yeah. Okay.
Big impact on the market. I have this.
They did. I don't talk to too many people. So
no, we call it triple witching still. So after Labor Day, used to be a little stronger, but it's been a back to work, back to school, clean house. They start getting ready for the end of the third quarter, and they start window dressing. And in this precarious market with I was listening to you guys talking about Powell. I think you made a couple great points about why he's doing it now, but we've got a lot of inputs outside the market, in addition to our fundamentals and technicals and seasonals. We've got China, Ukraine, energy, inflation, the Fed, and yada yada yada. So there's a lot of inputs and impacts on the market here, and I would suspect that week after triple witching, that ended Q3, which is notoriously weak, to materialize. I mean, we could get it early and ahead of time if something happens on the world stage or systemically in the markets. But all things being equal, I would suspect us to bounce around here in the beginning of September and then sell off into the end of Q3.
And then, you mentioned the quad witch. We had the June quad witch actually marked the low in the market. So
another notoriously weak quarterly expiration. We avoid the quad or triple sometimes and just call it quarterly expiration. But Q2, Q3, right in the worst 6 months, June and September, those quad witches, triple witches, whatever you want to call them, are notoriously weak. And the week after is even worse, which is something we track in the Almanac for years.
So it's enough to push us back down to that low, to that June low, 36.30.
I'm leaning that way.
Ooh, okay.
I think we can test it, hold it. I draw those support lines with a big thick marker or crayon. We could a little bit above, a little bit below. You can't be exact on that. It is
I don't want to test that low at all.
I think testing it and holding it would be pretty healthy.
Yeah, I don't want to think about that. Okay, what about midterm elections?
Well, it runs right into that because this is the weak spot of the 4-year cycle. I think I have a chart here for you that I set up. We got a few charts. Oh, where's that one? Oh, this is a great one. I'm going to show you the update on that. But the sweet spot of the 4-year cycle, bear with me for a second while I jump around my.
Just a quick market update. We did punch into the 400 or 4,000 for the S&P. We got the 002. We mentioned very limited resistance here in the market. So the bulls are fighting back after getting their butt kicked for 4.5 days. So, all right, what are we looking at here?
This is the 4-year cycle with the Dow, Sp and Nasdaq. You can see where we sit. I don't know if you is it big enough on your screens, but this is the weak spot. Q2, Q3 down on average a couple of percent, about 5% for Nasdaq, and then the sweet spot. You can see the Q4 of the midterm year through Q2 of the pre-election year is the strongest part of the 4-year cycle, the presidential election stock market cycle. And after we get into the, get close to the midterms, we tend to see this rally here, moves of 20, 30% on the NASDAQ or 29%. Cool. And, there's that move from the midterm low to the pre-election year high that we talk about in the Almanac, about 48% for Dow and about 68% for NASDAQ, all the way from the midterm low to the pre-election year high. So, whether the June low holds, whether we make a new low, which is still not, inconceivable. I know that's going to upset you, Joel, but it sets up the likelihood for a cyclical bull going into the pre-election year, the strongest year of the 4-year cycle. And then you look at, the political alignment. Everyone's rooting for, a change of power in Congress. And rightfully so, because everyone talks about Republicans better for Congress or better for the market. It's really about Congress, not the White House. Best combination is Democratic president and Republican Congress, which is, I guess, at least a 50-50 chance this year if you think about it. I think there's a couple of political things that happen that are moving that around a lot. I think Roe has an impact, and I think some of the spending has an impact too going the other direction.
All right, so we're not at the end of Q3 yet, no. But it's going to be pretty hard to say. I mean, yeah, we could rally back to all-time highs in the next month. I'm not anticipating that.
Not next month.
No.
No.
So talk to me about how the market performs after the Q3 we're still up because we had that June low, but just overall, how is the market reacting in Q4 after being down whatever percentage points that it will end up being, or give us a range?
Here's some stats I ran. I don't know if this is going to look. Are you seeing that on that screen or no?
I still see.
No,
Yep.
I'll just show you some of the rough work I did. So this is the Q3s, through down through Q3. This is like the top. I did above minus 5%. 5% is like a flat period, a flat number for us. So, you got these down Q3s. Here it is ranked by, in year order. This is the rank. We're down 17% as of the end of August. You're looking at a gain, 60% of the time Q4 is up. After this kind of negativity dovetails right in with the sweet spot that I showed you. And then since we just finished August, here's what it looks like with August. September, not great when the market's down year to date pretty substantially through August. And then Q4 kind of, not slightly positive, and the year as a whole is negative. So, we look for a rally in Q4. Q4 is the strongest quarter out there anyway, especially November, December, and we look for that October turn. Could happen in September. The cutoff, the deadlines for the funds to report with their fiscal years. A lot of them are still in October, but a bunch are September 30 year-end fiscal, and that's kind of what creates that volatility and action along with the quarterly window dressing and that October phobia that we talk about. So I got another chart I want to show you.
Let's see it. Bring it on.
This is new. This is I just updated this as of yesterday's close. This is our aggregate cycle. This combines the all years, the seasonal pattern, with the midterm election years going back to 46, as well as second years of decades, the old decennial cycle. And the amplitude's a little bit different with 2022 here. We got the that scale on the right side, so you can see the trend, and left side is a scale for the average. And we're tracking that. I put a little arrow in there to indicate the potential direction that the aggregate cycle shows us. This is something that we just did for the 2023 Almanac. Of course, I got it for 2023 in there with pre-election years and third years of decades, but this is what we're looking at for 22. And lo and behold, tracking this cycle pretty closely. I've put a few other comparisons out there over the year, throughout the year, with 1962 and 1970 and 74, and you've heard that chatter going on out there. So good news is, we're going to put in a nice double bottom, whether it's a high or low, or around, or that test that you're afraid of. And that sets us up for a nice move. So you wait for the best months of the year. You wait for a technical crossover signal in MACD, and you get some fundamentally sound stocks and good sectors that are set to move, and you stick with the system and the strategy.
All right. And what speaking of specific stocks or specific sectors here, and is there anywhere to hide here if we have another leg down to test those lows? Is there anything?
Our favorite sector right now is
cash.
4-letter word, cash. Yes.
Yeah. Okay. All right.
We're sitting tight. We have a little short out there. We're looking in energy. The SCO is something we put out yesterday to subscribers.
Okay. Jeffrey Hirsch, Chief Market Strategist at Probabilities Fund Management, Editor-in-Chief of the Stock Traders Almanac. We'll be looking for that to come out late in the year. Jeffrey, thanks for joining us, and we'll talk to you again soon.
Appreciate you having me, guys. Take it easy.
All right. Well, we stuck in that 4K here, 4002, and someone said that Dennis is out there selling the rip. So we have now backed off 20 handles, over 20 handles. So a little bit of selling after that 100-point plus rally, nearly 100-point rally off that low from yesterday. So we'll see. Once again, I'll be looking, see if we come down unchanged to that 68.75, and better not go red after that nice rally, because a lot of people will be caught on that one. Mitch, anything catching your eye here during that interview with Jeffrey?
Oil continuing higher a little bit. At least that's what I'm catching out there. Trying to see what's going on. I know that there is talk of the G7 finance ministers holding a virtual meeting to agree on a cap of Russian crude oil prices. And of course, on September 5th, we get an OPEC plus meeting. So right when we come back, oil is going to be in the kind of the forefront there. Will they be cutting production or not? Definitely that meeting is going to take place on September 5th, so something to keep on watch. You could do me a favor, Joel, just reshare your charts. Just want to make sure you get them up there.
I released them. Yeah, well, that Nord Stream 1's coming back online supposed to come back online on Saturday. So
yes, also keep your eyes on that. What will happen by Monday? Europe could be in crisis if that doesn't come back online. I mean, they're definitely going to be in concern if that for some reason definitely comes back lower than expected. It's something to keep on watch. Of course, that was going to be released over the weekend, so it's kind of hard to trade that. I just been hanging on to my swing. I've taken so much profit that I'm just going to keep waiting to see what happens here. But I'll tell you right now, it's dangerous. It's dangerous playing a game like this where you don't know what news is going to come out, but it's something to keep on watch. Now let's keep going. I did want to talk about kind of the Twitter edit button. I don't know if we want to get into that talk.
Sure.
All right, quick. Let's touch a little bit on it. Twitter getting a little bit of a bounce, and I just don't know how to trade Twitter because it's just such in this Elon Musk time. But let's talk about it here. Twitter subscription offering just got more compelling with the edit button. This came from Loot Fund, Gene Munster. You guys know how we like Gene. He said, also, of course, this includes now the use of the edit feature. At least for the near term, you need the Twitter Blue subscription, which currently costs about $4.99 a month, following a steep increase earlier. It was at $2.99 a month. They increased it to $4.99 a month.
Okay, you know what? I kind of reiterate. I think the Arbs got a hold of this one, and I don't think the Arbs are looking. I think they're looking for the deal. If I'm looking at this chart, they think the deal is going to get done at 44, or perhaps it won't get done at all. I know there was a court ruling that went, I believe, in Musk's favor. That started, it went down with the market. So, I mean, it's 44. Now it's just creeping back down. I'd really, I don't know if you want to make it a trading range. It could be a trading range, but right now I think some pretty hot, sophisticated Arabs are just trading the ranges in this one and not getting involved. We did, if you want to look at it technically, which is very hard to do with a deal on the table, supposedly. You had several lows right in here in this 38.75 to 39 area. That was back at the end of July, so there is support. On the daily charts, let's just take a look at Tesla. And that had, I know you were looking at this one early on yesterday. Let's see what happens. You did get a spike, a corresponding spike with the job numbers over 280, trading at 280 and a quarter. It looks like we're going to make quick 81 and a quarter. I'd keep an eye on that. Yeah, you did get through it in the pre-market, but if you get through 81 and a quarter, I don't know if I'd want to be short that thing because there's your 3-day high is 88.48, and that coincided with a close that you had last Thursday. So that is taking a look at Tesla. S&Ps are pretty volatile, but they still seem to be buying the dips here after we crossed over 4K, pulling back. So it seems like right now we got a bid. What are you seeing out there, Triple D?
That was crazy action. I mean, I was trying, just bouncing around so much. It got nuts there. I got a good sell off in Microsoft at 62.50, which I think I might have top ticked at.
Nice.
I made in that, I don't even know how many trades I made. I made a pile of trades in the last 20 minutes. I think that was one of my best ones, though, because I had some Microsoft. And if you bring up that chart, I think I got out. I think I might have top ticked it.
Let's see if you made the journal.
Close.
Looks like
62.50, I think was my. I'll go look at the exact sale.
Yeah, that's the high. That's the
yeah. Was it
high.
exactly 62.50? I'm scrolling back. 62.45.
Dennis said sold to you.
My chart. Okay.
Sold to you.
TradeStation got your print in there at 62.50, but
yeah, I got some off at 62.45, and again, good. You're just in and out. You're in and out, and trying to. It was a stressful 20 minutes, I tell you, because we got the initial rip and then we just opened up and we went red briefly, for a split second, and then they just started buying and buying and buying and buying, and I'm like, oh my gosh, it's gonna be a ripper. And now they've pulled back here, so we've calmed down after the number, but that was some wild trading. That was the best number I've seen in a while, for trading wise.
Yeah. Usually, they like at 3.75, right? Or 3.7 versus 3.5, right? So that's what. I
haven't even had time to analyze the numbers because there was so much action. I'm like, you're just trading. You're trying to you can't sit back and be let's crunch your numbers and really think about this. I'm just like,
you don't need
you're
to.
Just seeing the action. Yeah, the action will tell you. Really what's happening here. So. It was wild. I'm kind of exhausted, to be honest with you, after that 20 minutes.
your hair's standing up on end.
Well, I thought I combed it.
Right. We did have the algo jumpers that came in 826, 827.
Someone had that memo.
Yeah. Someone they had their server right in there to wherever it comes out of, that located server, and they're like, oh yeah, 3.7 versus 3.5. So that's what you got. So all right, anything I looked at the banks. They didn't really move. I saw Bank
Oh, they're
America got a
moving.
little bit of a
They're moving
bump.
now.
Yeah, it is. It is back up. Alert on
The
this
only-
one. 3 highs in the 34.20 area.
My only concern here now is I feel like we will get kind of a little bit of a push back from those technology names that are beaten down. But is this kind of an opportunity to hold here, or should we kind of be more selling the rip in the intraday action? I'm just worried about overnight China news. So in my eyes, I'll be looking for technology names to push up today. I have a feeling they could get some more lift, but I'm going to probably be selling the rip if I get that rip.
Well, this is thinner volume on days like this, right? And I think I mentioned this yesterday. Once you get the ball rolling in one direction on a day like this, and it seems to be rolling north, it's kind of hard to stop it. So we'll see what you know what you got a Labor Day, your barbecue, you're at the football game. Yeah, the market had a bad week, but it came back on Friday. That will be the topic of conversation. 5 minutes left here. Spruce creeping back up towards the high. If I had a really juicy target on the upside, Wednesday's high is 18 and a quarter. And that fits well within the average trading range today. Actually, that's just above it. So take a look at that. You want to do some ticker time here to wrap it up? We got a few minutes left.
Yeah.
What do we got? Mitch, we'll let you take the lead. What do you see out there for ticker time?
All right, nothing yet, but I'll just try to take a stock off the hop here. Who's the first one to get one in here? Let's see.
Oh man, throw us a curve.
Just throw that out there.
Throw this
there
one
it
to
is.
Dennis and Mitch.
Oh, yeah, I like that one.
Guys.
When a stock falls 33% one day, you often get a little bit of bounce back, but don't start thinking, oh yeah, we're going to go back to $75, $80 anytime soon here. I think, you've got bag holders all over the place here now. It's making a multi-year low like we're talking about. I got to go out to the monthlies here. I'm going back to 2018 price.
Literally what I'm doing.
So $60. You do have, I can see in 2018, you kind of had a support area there going back. It's unbelievable how, this has given back a lot of stocks, how we've given back the entire 2020 rally, which was incredible in itself. So as much as the incredibleness of the 2020 rally was, I think it's even more incredible how quickly some of these stocks have given it all back. It goes to show you got to be buying companies that make money.
Inside day is what I'm calling for. I don't have to worry about the upside here, but 60 to 63, I think maybe a couple inside days. Everyone that wants to get out. So I'd see support at 60, resistance at 63. That's over the last hour.
Yeah, I think it's just going to be sideways here for a little while. And so I would think it could make a move towards around 69.30s, but I think you're going to stay within a range from 56 to 69 for a little while here as it kind of filters out. And if you do get those upside push, I would feel that you would have, overhead sellers as people want to get out, especially when a stock gaps down that big.
That's the problem, is the overhead supply issue, which we talk about all the time. When stocks, have been coming down, and then you get a little period of consolidation for the last 3 months between 80 and 100, and they're like, okay, well, eventually, nice consolidation, we're eventually going to move back higher. Then you just flush and nail all those people that just bought in the last 3 months. So now you have a whole new group of bag holders that bought the stock between 80 and 110. And they're all hoping to get their money back out. So this thing ever gets near 80 again, it was just like, get me out. You bought this at 120, 150, forget about it. You're going to be eating a big loss here at some point in time.
Yeah,
but 80 is now epic resistance. And that's still $20 up from here. So there's going to be bag holders all over the place in this. It's so tough for stocks to just bounce back.
How about Oxy? What about Oxy?
Yeah, I'm kind of upset I didn't buy the dip yesterday. I was looking for it. I was like, can we get 66? It didn't give it to me.
I wonder if Buffett got down and dirty yesterday. We might find out tonight or over the weekend here.
He's not going to buy up here.
I was looking for 66.
You think he wants the 58 again? He's waiting for the thing.
No, not 50. No, I don't know. Maybe he sold the rip. Who knows?
He didn't.
Maybe he lightened up a little bit. For you Oxy traders,
We would see that because Joel, we would actually see those because he's over 10%, so he's only got 2 days to
2
close.
days. Yeah, 2
you're
days.
right.
So
You're right.
2 day rule.
so again, when you're under 10%, you got the 45. When you're over 10%, I think you only got the 2, if I'm right. Chat might correct me on that. So I'm pretty sure we would see the sales 2 days after. So it's already been 2 days since those highs.
Good
so
call.
it doesn't look like he sold any.
I'd be hawking 72.40 today. That's your that's what I would like to see. That's another $2 higher. The reason is you had that nice move over 76. You had your 2-day, 3-day, 4-day butt kick in. So every move has a counter move. So boom, I'd look for resistance up at that 2-day high. Get above, hold there, then why not? Why not go up and test that high of the move? Actually, that was closer to 77. The dip bought again here, Dennis, coming back toward the highs of the session. I can't find my, I'm giving my resistance point. Of course, we'll always see what happens off the open. We got options expiration. You seeing anything in imbalance land, or are they just because of the options expiration, they're kind of jockeying around with it?
What options expiration? We got
Weekly.
Oh, the weekly option expiration.
Yeah. Nothing major.
Yeah. No, I don't see much. The
Okay.
balances are still, you got the institutional money managers are just getting to their desk right now. And now they're trying to read about the jobs report and analyze what they're doing. So this is how it works. That's why, we're real traders. We're in here all the time. Not that they're not real traders, but they're fundamental traders. So they're slower traders. So it's not like, they're in the heat of the action. They're still analyzing what they feel like doing here, and they're analyzing the jobs. I think the word of the day is chop. I don't know if we're just going to have this continuation where we buy or sell. I think you're going to see a lot of chop here. So I'm just fading moves all over the place. What 2022 has given me is lots of opportunity to fade moves. I think today is another one of those opportunities. Fading everything. Fading the rallies, fading the dips, fading everything. Yeah.
If you ain't faded, you ain't trading.
That's what they say.
All right. All right, Triple D, I'll check in with you at the top of the hour, and I'll be back.
Okay.
All right, guys. Joel Elconin, Dennis Dick getting on out of here. You guys can catch Joel Elconin on Pre-Market Prep Plus, like always, as he goes over through some ticker time extended. Now, I'll be watching to see what happens. Will we get that kind of push up? Yesterday, I feel like we were pretty good. Of course, we did get kind of like that opening kind of push down. Eventually, we got that rally we were kind of looking for. We'll see if it kind of holds. Of course, we'll be looking at to see if we could keep pushing up here. Can we hold back into the 400? I'll be watching that on the SPY. If you guys want to come over to some live trading action, we got live trading today. And so, hey, guys, like always, we've been doing really great here. I'm on my portfolio challenge. We'll see how I can continue going. Yesterday had some stop outs, but going to continue battling. Come on over to live trading, guys. Come have some fun with us. As I got Lord Ryan and Zunaid going into the trading day. We'll see what happens today. Hit the thumbs on up. Let's go ahead and wrap up the day and continue on right here on Benzinga.